All of us would like to protect our hard-earned cash in a safe place where it is shielded against market volatility and a secure place where it can grow tax-free. Here's a great analogy taken from the children's story The Three Little Pigs and the various houses they built: the house of straw, the house of sticks, and the house of bricks. Let's say in this analogy that the stock market represents the house of straw. As long as the market is doing well, the money you placed in the stock market, currencies, or certain mutual funds is growing. But when the economic big bad wolf starts huffing and puffing, the straw house gets blown away, along with a good portion of your money. History has shown us that roughly every 8 years we experience an economic downturn, for various reasons, including natural disasters like Hurricane Katrina, man-made catastrophes like the attacks on 9/11, and recessions. Sometimes the downturns are a result of the natural correction in the market, but if you have your money in the house of straw when a correction happens, watch out, because here comes the big bad wolf. The house of sticks is represented by the real estate market. It may be a bit safer than the house of straw, but it still involves risk, because when home values drop, like they did back in 2008, you'll take a hit on your chinny chin chin. If your money is invested in a stock market, the straw house, or in real estate, the stick house, it's not as safe as keeping it in the house of bricks. The house of bricks keeps your money safe during downturns in the economy or stock market, and it is growing, and it is available to you anytime you need it. What is the house of bricks? It is creating your own bank or pool of money that can be used to finance your lifestyle, purchases, business ventures, and just about any expense. This strategy is often called the infinite banking concept, or becoming your own banker. This is how it's done. You set up a properly structured dividend-paying whole life insurance policy. The growth in these types of insurance policies is guaranteed, unlike conventional market-related investments that can go down. So how secure is this house of bricks? The life insurance companies that we deal with have been in existence for over 100 years. These companies have a proven track record of consistently paying dividends to their policyholders. Unlike banks, which only have to have enough cash reserves to cover 1/10 of their deposits, life insurance companies must match dollar for dollar all the money invested in their policies, thus making these companies more sound than most banks. The moral of this story is, when your money resides in the house of bricks, you're protected from losing money when the markets dip, like with the house of straw, and you're not upside down with real estate when property values cave in, like the house of sticks. Your money is safe because it is protected against loss, liquid because you have access to your funds without penalty or qualification. Your money is growing because compound interest is working for you. And finally, your money is protected from taxes when structured properly. Take that, you big bad wolf! Contact us today to move your wealth into a house of bricks so you and your heirs can live happily ever after.